Hi, everyone. Today's guest is Chris Mooney. He's 25 years of experience in acquisitions and portfolio management. He's a key figure at Acquira, and he brings a wealth of knowledge and experience to help clients navigate the acquisition process. Oh, there you are. Hi, Chris.
How you doing, Dante? Good to see you, man.
Good, good. Yeah, good to see you too. Yeah.
I see Gloria's
Well,
here too. Gloria and I had spent about a year last year on and off trying to work through one of her transactions. It's good to see you again.
Good to see you too. Yeah, finally I said enough is enough.
It's good for you. You're stronger and better for it.
Oh my God, believe me, that was a big lesson all year round because I went from everything from the beginning to the end. I didn't sign, but I went through the whole process basically. So
I
yeah,
sure
I
did.
came stronger.
I'm looking to hear about the next one. I can't wait to see it.
Oh my God, yeah, me too. Working on it very hard.
Good. I look for you too, Gloria. When I'm looking at listings, I always think about you and see if I find you a match that I think is a good match, I'll send it to you.
Thank you. I appreciate that.
Yeah, no worries. I'm happy to do it. Well, Dante, what were you hoping to achieve today with the team?
yeah, I'll start you off with some questions, and then if anyone has any questions, just raise your hand, and I'll call upon you guys for it. All right, so start you off. How would you advise acquisition entrepreneurs in structuring their deals to attract financing partners?
Yeah. So the best structure, there are different ways to do things. A lot of the times, your structure depends on your goals. And if you've got clear goals, the structuring component really becomes maybe a secondary choice relative to what your investors are looking for. Because ultimately, your investors are looking for a return on their investment, a risk-adjusted return. But the structure itself is somewhat secondary, and I'll explain that a bit. If you want to, for example, my favorite structure is a C corp. I like those structures for a couple of reasons. One is I'm allowed to issue a diverse number of classes of shares that can provide different sort of tools for growth. And a lot of the things you can do in a C corp aren't available in things like LLCs and other pass-through entities. The other thing I like about C corps is I'm okay paying a little bit of income tax along the way at the corporate level, because for me personally, what's important is having all, if not most, of my capital gains tax exposure waived under an IRS 1202 transaction. So for me, the structure is a consequence of my acquisition, hold, and exit strategy. And then when I talk to my investors about that, I can paint for them a picture of how their net tax benefit would look if they invest in my transaction. I also like C corps. As maybe a tertiary reason I'll add is that it can sometimes be complicated if you have investors involved in a pass-through entity, and your investors have different views on how you should run the business from a net tax perspective, and that can cause angst between the operator and the investors at times. C corps, it levels the field where everybody's treated the same. But in the pass-through deal, like an LLC, you might run in a situation where one of your investors, is concerned that you're passing all of the revenue quarterly, the tax burden to him or her as an investor, right? And you may have some investors investing through a tax-advantaged account, like a retirement account, and other investors are being taxed as an ordinary account. So now your investors are being treated unequally in a pass-through entity, and that can sometimes cause angst. So for those reasons, the two are the primary, but I'll just a little bit of commentary in the third. But really the question was, how would you structure it? I mean, I think given all that color, you really have to be clear what your goals are, so you can be clear with your investor on how you will generate their return on a risk-adjusted basis. So as long as you solve for that, the structure sort of solves for itself and gets you where you need to be.
Perfect, thank you. Next up, I have, what advice would you give to acquisition entrepreneurs to help them successfully navigate the financing process and secure the funding needed for their deals?
Yeah, that's a good one. Thanks for asking that. I think the primary mode of finance here is through an SBA loan program. Ideally, you have a good match between you as an AE from a personal asset perspective and the size transaction that you're pursuing. Knowing that, I think through the coaching here, we tend to coach to get you into larger transactions so you don't end up in that working for a business rather than working on a business. We know that old trope. So if you can't solve your transaction through a 7A alone, and you need to stretch a bit further on whatever you can negotiate on a seller financing basis, both debt and equity for them as well, you have other equity sources. One of them is the built-in acquire capital instrument, where I can come in and deploy some capital side by side with the AE and help close the financing gap. So that's one of the ways you can do it. You can also come up with friends and family. There's all kinds of also alumni-based investment groups. So you can always reach out to your alumni business schools in particular. Even if you're just an undergrad, the business schools tend to embrace the undergrad entrepreneurs as well. And you can do some capital raising there on the equity side. So there's lots of different ways to approach it. I think what you have to do is sort of figure out what do you need and what's left. When you are raising debt or equity, whether it's a bank or an investor, they like to see that the entrepreneur is all in. Right? They're actually putting in a meaningful amount of their personal assets into the transaction beyond just the PG. It's very difficult for someone to get comfortable with a deal where the AE isn't putting anything in a transaction and asking the bank and the investors to take all the capital risks going forward. So it gets more complicated the less you want to put into a transaction. All investors, no matter who they are, want to believe and feel comfortable that their capital is the most important capital in the transaction and that the AE is going to take care of it. And one of the ways you show and demonstrate that is you've got your own capital at risk, and you're demonstrating that you're going to be in there every single day, driving a return for themselves and for their investors. That's very key. We're at this stage of the game where we're dealing with very small transactions. The idea of buying a company and never visiting it because you're just a passive investor doesn't quite work in a 7A model. You really kind of have to have the sleeves up, work the elbow grease, and get that business built. And hopefully you'll graduate to sort of a more grown-up capital strategy where you can kind of walk away and be the big investor. But there's a lot of work to get there from your first close on your first deal and getting to that point in your ownership career.
Thank you. Yeah, and just knowing that you work in Acquire Capital, what role does Acquire Capital have within the Acquire ecosystem? And can you give us a little bit of an overview?
Yeah, so I get involved more towards the end of the process. So if you think you're going to have a need for an equity investor and you think that Acquire Capital could be a good fit for you, you really want to reach out to me right after you sign your LOI. I'm happy to do a pre-LOI consult just to see if we have a general consensus on and fit and match. But the process of raising equity, can be complicated and lengthy depending on what you're trying to do with your transaction. So come see me early and often to start those conversations so that we are not sort of surprised at the last minute where everybody's ready to close, but we forgot to get the fund involved, and now we got to go play catch up on trying to solve for the last couple $100,000 of your deal. So I will typically be just on the periphery while you are in the process of identifying your investment thesis and going to investment committee and doing those sorts of things. I'm really coming in at the end, sometime between execution of LOI and then working with you all the way through the close, because I'll be wiring funds into your closing accounts on the day of closing. So it's a trying to think of the words to say. It's a team journey. You can't do it alone. And then I'll be with you, of course, as an advisor and partner post close, because now that I have put my investors' capital into your deal, I've become an asset for you to rely on in terms of helping develop strategy and working through growth and all kinds of stuff, because the relationship is beyond just the capital. It's not just a passive check and we disappear. We're there to help you throughout the life of the investment. I mean, we could be actually on your cap table for the next decade, right? So that's the beginning of a very long relationship. So we definitely don't disappear after the close. In many ways, it's where the work really begins in helping you grow the company so that you are incredibly successful, and then we can turn around and share a bit of that success with my investors, which again was the motivation for their investment in the first place.
Oh, we have a question from Edward here. So what are the main conditions that acquire capital base their decision on what deals to invest in? That was my next question, Edward.
Yeah, so we focus on, so we can't invest in everything, right? So we're not a generalist fund where we just put money to work wherever it feels fun. So in order to attract capital, you have to be a bit narrow in how you define how you're going to use those dollars. So we put up some guide rails, and they're narrow in terms of the infinite world of possible investments, but they are also broad, I think, in terms of what Acquire does and the kinds of transactions it coaches its clients towards. So broadly, we look at the home services and US-based manufacturing opportunities. We want transactions that have $1 million or more of adjusted EBITDA. We will dip below that line for the right reasons, but in terms of framing out a pro forma transaction, we'd like to be above $1 million. We're looking for multiples, well below 4x.
And yeah. Oh, sorry.
I was
Go
going
ahead
to
if you
say,
have.
and we're looking for a reasonable AE business fit. That may come through education, that may come through experience. It can also come through passion. I often will find that out through the business plan process. I would tell you that one of the strongest pieces of information you can provide is a well-conceived business plan. That will be required for debt. It's also necessary for equity, and it really helps you focus your thinking on what you're going to have to do post-close to make this business successful and to demonstrate why you should be the owner of that business and what you're going to do differently from the people you're about to buy it from.
All right, thank you. And one last question here. How does Acquire Capital differentiate itself from traditional lenders or other funding sources?
Well, we're not a lender, so that's a good way to think about us. Is we're purely on the equity side, so we don't lend money. We are an equity investor, typically in the form of preferred shares. We are very similar in format and style to other private equity resources. I think the difference is that we are sort of in-house capital. We understand what you're doing and we understand the businesses you're investing in, and we're going to be there for you for the long haul. Our investors, the LPs that create the fund, are looking for what I call market rate returns. It's not cheap, it's not expensive, it's just market. That's really the purpose of the fund, right? Is to attract capital at market rates and deploy it into deals behind people we really believe in. And we get to know you through the acquisition process. Like your journey right now, as you go through this process, is a form of investor underwriting. So as the management team gets to know you, we get to understand your transaction, what your goals are, and we can then determine investability in terms of our obligations to our own investors.
All right, perfect. Thank you. If there are no more questions, I think that might be it for today. Thank you so much, Chris, and thank you so much, everyone, for coming out.
I'm off the hook that fast.
I got one quick follow-up, actually.
Yeah, sure, please.
Oh, go ahead. Yeah.
Earlier, you were saying capital gains for C corps don't get taxed. It's just my understanding then that essentially distributions for C corps exempt from taxes, or
yeah. So thanks for the question. I'm happy to clarify. So go ahead and Google IRS 1202 and 1045. Those are for certain qualified small businesses. The AE can actually sell their company. So there's two things to think through. If you hold your business as a C corp for 5 years or more, you can shield at least the first $10 million of capital gains from taxation if you're a C Corp for the prior 5 years. If you haven't held for 5 years, you can do basically a tax deferred exchange under 1045, which allows you to sell the company you have and buy another one that's also a qualified small business and defer your capital gains obligations to the new entity, kind of like a real estate exchange, right? Like a 1031.
Okay,
Yeah.
Okay.
But as soon as you hit 5 years or more, you'll be able to shield the gains coming off of that sale. It's like kind of like doing a 1031 in real estate, but the last deal you don't have to pay any taxes instead of paying all the taxes at the end.
Right. Okay.
It's a cool instrument. I like it because I have this sort of exit mentality. So
Yep.
I'm okay, for me personally, paying a 21% corporate tax on the net taxable annually, because I'm looking at all the growth and all the things we're doing in 5, 6, 7 years from now. When I sell that thing, I don't want to be exposed to all those capital gains. So for me, it's a very central to my strategy as a business owner. But there are other ways to do it.
Chris, it's Penelope talking. Hayden got one opinion that said that if you deliver home services as opposed to manufacturing, construction, making kitchen counters, cabinets, that sort of thing, if you deliver the service, that is not eligible for QSBS for the 1202.
Yeah, so I qualified my comments as if it is a qualified small business. I know that architects, doctors, veterinarians, those sorts of services businesses are specifically exempt. As you know, my thesis is all manufacturing companies. Yeah, everything I buy is a manufacturing company. I'm not aware that other businesses in the home services are specifically exempted. So that's something to look at if you're finding opinions like that. But definitely the professional services, they're very clearly accepted, because if so, every doctor, lawyer, architect, they'd all be doing it.
Okay. Cool.
Go ahead, Alex.
Yeah, thanks, Dante. Thanks, Chris. So my question, I think towards the end of last year, maybe Rich might have mentioned it, that the first fund was going to be rolling up, and then you're immediately going into a second fund and possibly opening up the investment thesis. I think you mentioned specifically the construction. Could you speak more to that timeline and what's changed with the new fund and when that's supposed to open, if it hasn't already?
Yeah, so the new fund hasn't opened. We're still deep in the midst of the first one. In fact, we haven't even closed the capital raising phase of Fund 1. In terms of construction, I think there's a lot of construction businesses that actually are conceivably home services, as the way it's sort of been broadly defined. I think that's one of the main reasons why folks should reach out if they have a capital need, to have an earlier conversation. One of the key things we look for when we're trying to make those definitions sort of meet its purpose is to find out what is the value add for having acquirer capital involved, right? What does the management team know about the business, and what value and advice and strategy can they offer beyond just the capital? So come at us a little earlier if you think like your idea and your target may be a little bit on the bubble. Let's have a conversation and see if we can't work through a solution.
Sounds great. Thank you.
Yep.
Are you gonna be in Fort Lauderdale next week?
No, but I'm almost always in Tampa.
Oh, perfect.
All right, Chris, I think you're actually off the hook this time.
Okay, great. Thanks for your time. I appreciate it.
No, thank you for your time. Thank you for coming, and thank you everyone for coming. We'll see you guys next Friday.
Thank you. Take care.
Okay.